to put the spotlight on Mumbai-based audio company Boat Lifestyle, and they sure have come a long way since the inception in the year 2014. It was founded by Aman Gupta and Sameer Mehta. So many questions now to ask as to whether or not the company's IPO plans will be back on track, what the view is on new categories, as well as their financial metrics. We've got Sameer Mehta, co-founder, CEO and MD at Boat Lifestyle, right here with us to answer all that. So I'm going to be bombarding you with a lot of questions, Sameer. I just want to start off by getting an overall view, because the International Data Corporation, or IDC's report indicates that the wearables market has seen growth and the market has the potential to grow pretty strongly, but there could be a decline overall. What is it that you can tell us on ground about the wearables market?
So thanks, Aman, for inviting me. It's a pleasure to be here and to be talking to you. Just to talk about wearables, right? So wearables essentially is divided into two categories, which is one is audio devices and other is the smart watches space. The smart watches space is actually kind of taken off really well. I mean, it's growing at about nearly about 300 to 400% year on year in the past 2 years, and we expect that growth to kind of plateau to about 40-45% this year. But essentially, this is a massive shift happening from analog, watches to digital watches. And this is just, the journey has just started, right? I think this is going to be a very big industry. It could probably be $1 billion industry in the next 2-3 years. And, it's going to be a big focus market for Boat as well.
Okay, $1 billion, that's the expectations in terms of the smartwatch category. But moving right on then, let's just discuss the financial metrics, because what has remained consistent over the years when it comes to Boat Lifestyle is the fact that the company has managed to remain profitable since the first year of its operations. Now, while you continue to remain profitable, the number has declined in terms of the kind of growth that you've seen. What is causing this decline in the profit growth rates, and what's the projection?
So two things here, right? We've grown really well. We are a very lean team, and now we're trying to professionalize the company, right? So we're making the right amount of investments in the business and for the business. So ensuring that, we are building a platform that is scalable. And because of those investments, the profit looks a little, lower than past years. But just to put things in context, we've kind of, we've made an acquisition in Singapore for a wearable devices company at about $40 million. So we actually made the right investments in the company, which will allow us to scale over the next few years. So that's one of the reasons. And also the other one is, we've grown so well. We've been growing at about 150% CAGR for the past 3 to 4 years. Especially on the back of COVID, right? During COVID, everybody was at home. So people were using their headphones and, they were entertaining themselves at home. That has kind of, come down and people have started to go out. So we're seeing a slight bit of a plateau in terms of audio market as well. But overall, we still look to grow at about 20-25% year on year, which at our base is quite a substantial number.
Okay, 20 to 25% kind of a growth rate. What about the outlook when it comes to, your revenue projections as well? And are you worried now that as consumers are working less from home right now, and that owning different audio equipment, etc., has become, is that on the decline? Is that a bit of a worry when it comes to your revenue projections down the line?
So last year there was a plateau, but this year again we are seeing good momentum and good growth. We've come up with new products and created differentiation, which is allowing us to take market share from others as well. So essentially this year we should be again growing at about 20-25%, and we don't see that changing anytime soon, because people are actually not buying one audio device, right? People have different audio devices for different kind of moods that they have, right? Some people use it for audio, some people use it while working out at the sport or the gym, or people who are actually working from offices are preferring ANC headphones. So essentially every person is actually buying anything between 2 and 3 devices. And that will remain to be the positive momentum in the business over a period of time as well.
Okay, now I think the question that's on everyone's mind, the IPO plans, and that has, of course, been pushed down the line. What was the reason for that? And are you now a little more clear in terms of what is going to be the IPO timeline?
So we don't have clarity as of now, as we speak, right, as to when we'll do the IPO, but it's a question of when and not if. We are very, very clear that we have to do it. Though the reason that we pushed it out is because back then you saw how the markets have turned, right, and they've turned really badly. And if you look at all of the other e-commerce or tech startups that have been listed in India, also their shares also are not doing as well. So we wanted to make sure that we enter at a time where we have positive momentum in the business and in the markets as well. So the IPO is on the table. It will happen. The timeline is something that we're not committing to as of now.
Matter of when and not if, but can you give us a little bit of clarity in terms of what the last fundraise was and what the valuation of Boat Lifestyle currently commands?
So we actually raised about 500 crores in the month of December, which essentially values the company at anything between 10 to 11,000 crores. That's where we are currently. But we are actually next round is going to be essentially IPO. We are well capitalized as a company, and because we've been profitable, it kind of helps us to maintain our equity. Me and Aman actually own more than 50% of the company still, and we would like to keep it that way going forward as well.
Okay, so as of now, there's no other fundraise round apart from what you did in the month of December, right?
Yeah, absolutely. Yeah, we're not looking at fundraise.
I want to discuss the product categories as well. There's truly wireless stereo, audio wearables, which includes the smartwatches and others. Where does the majority of your revenue come, and what is your fastest growing category right now? And what does that contribute to your overall top line?
So as a company, we are an audio first company, right? So that still remains our core. We want to build on that, and that's about 65 to 70% of our revenue comes from audio. Within audio, the TWS category has seen crazy amounts of growth. It's grown at about 60 to 65% year on year, and that remains the largest category for us. Although neckbands saw a decline last year, but still neckbands have made a good comeback, and this year we are seeing again positive momentum. Wearables, again, like I said, right, we are still at the very, very start of that journey, right? People are switching from an analog wearable to a digital wearable, but the health and the fitness aspect of the wearable is not coming out as of now, which will come out through the software play, and that is where we are poised to kind of leverage all of that and become a big strong player in this category.
Okay. You're investing as well heavily in manufacturing capabilities. What is the current installed capacity of the company? And can you just walk us through, what the outlook is in terms of production from India and contract manufacturing, the breakup?
So essentially, if I were to put, that's a very, very positive story for us. We're essentially manufacturing about 75% of our devices in India and only importing about 25% of those. Within that, we have a JV with Dixon, which is kind of taking off now, and our installed capacity would be anything between 2.5 to 3 million devices. Along with this, we also work with a lot of other EMS manufacturers in India, where we augment our capacity for peak seasons. So we have partnerships with Foxconn, with VVDN, with Ilgin. So tons of these other players also we work with, but the core of the manufacturing will still happen within our JV with Dixon.
Okay. And how much is that, JV, the 50-50 JV, looking to invest down the years? What kind of, products are you looking to produce worth how much?
So the JV essentially will require a capex of about 60 to 65 crores between both the partners, and that's what we've capped it at as of now. But depending on how, the market demand shapes, we'll be ready to invest more. The facility currently that we have is about 2.5 lakh square feet, and we're majorly going to be making TWS products over there. The idea is to, keep that capacity installed and also grow from there. So, we're poised to kind of, double that capacity over the next 1 year.
I understand that one of the challenges for the company is the rising competition and affordability of technology. How much is that a challenge for you at Boat, and how are you looking to mitigate it?
So, we made the right investment about a couple of years ago by having our own R&D, right? We have the Boat Labs based out of Bangalore. We invested in that in about 2012 2020 at the start of COVID, where, people were actually saving, money to not invest and keeping that money in the bank. We started a lab because we knew that the only differentiation has to come when you are able to engineer the product yourself. And now we have the engineering capabilities where we are able to create platforms in-house and do software level differentiation, because hardware is accessible to all companies across the world, right? The only differentiation comes from the software layers that you build on top. And we have the capability internally, and we've actually proven that with our first launch that we did about a month ago. We launched a product called the Boat Nirvana Ion, which is about 120-hour battery backup and 24 hours on a single earbud, right? Nobody's ever done that. So we have the capability to do it, and that's why we feel, because of the differentiation, we will not be as challenged by a competition.
Okay, that's pretty interesting. And also, Samir, you guys are digging quite deep into end-to-end IoT stack technology for smartwatches. Tell us more.
So this is the acquisition we made of Kaha, which is a Singapore-based company. They are an IoT end-to-end IoT company. So what we have is essentially the embedded software which sits on the hardware, the app stack, and the cloud stack. We own the entire stack end-to-end, and that's where the software differentiation comes, right? We are able to do, over-the-air releases for the existing smartwatches of newer algorithms, of newer features that we are building out, and that is a capability for which we invested in Kaha. Like I said, the wearable currently is a hardware first game. People are only checking, watch faces and HR on it. But, as the customer goes along, right, if you are able to create a difference to his life by, pushing up, getting nudges to them to, work out better, to sleep better, I think that will create customer stickiness. And that's why we invested in Kaha, and we believe that we have a right to win in this space.
All right. I just, before we let you go, want to get in a sense as to what the vision is for the company, where you see the company headed, what would be your growth projections, and what's the eventual game plan, given that you're in multiple product categories right now.
So the North Star metric for us is to get to $1 billion of revenue while being profitable. That's the first, North Star. But along the way, also building capabilities which allow us to get there, right? So the focus on R&D, on building in-house platforms, on creating that software level differentiation, that's where we'll focus. Essentially taking away, bringing in a bigger moat to our business, which is very, very important, right? Because right now, where India is essentially, most of the companies are trading or buying products out of China. But, the differentiation will only come through when, you have a complete end-to-end handle on your product. And that's what we are creating. So yeah, that's the North Star. Within the next 2 years, get to $1 billion revenue and be profitable at the same time.
Okay, that's the game plan, Samir. All the very best. And checking out stuff on your website looks pretty cool. I'm quite tempted to grab some, perhaps air dopes myself. And good to interact with you on ET Now.
Pleasure meeting you, and hope to have you as a boathead for life. Thank you so much.
All right, let's put this